Welcome back to my channel. So today's topic is how do we mark market structure? How to mark market structure correctly. So this has been my struggle for a very long time in the market. Like I've been struggling with it back to back. Everybody's giving their own rule. Some people say three candle retracement. Some people tell you you have to measure it with a line to know if it's a valid retracement, and so far and so you know, giving their own ways of marking retracement, a valid retracement. But how do you know that the structure that you are marking is a valid structure, giving you a good order block or a good fair value gap? Now, this is where we come from. After much research, I even lost a prop firm doing this research because I realized in Forex, if you use too much of demo, you don't get the results you're looking for. So I started using my life money. I lost a lot of money, but I really wanted to know what I was doing correctly. And the final conclusion was swing point. This swing point, three candle, three candle what? Three candle formation. Now, I always wonder why people always talk about this swing point. I never knew that it had a meaning. When price create a swing point, right? Before it creates a higher high, this right? Higher high, higher low, higher high, higher low, higher high. A swing point is always created here, right? Now, to know a valid swing structure, you go to a time frame lower and look for a sweep of market structure. You see this? You are looking for a sweep of market structure below and above on a time frame lower, and you mark this whole zone as your swing structure. Some people actually do it directly. You just go on 4 hours looking for where the shift of market structure take place, and they keep going higher and higher and higher and higher as a long zone. But if you go to one day, it's just one swing point. I'm going to show you example on the chart for you to see how it became easy for me for these past few weeks of market structure. You have to keep practicing and studying to get something simpler for you in market structure in the market. And I came up with this idea. Now, if you go to what am I looking at here? Okay, let me delete this and do a replay here. To let me do the replay to which level? Indirectly, we're going to do a top-down analysis, but in a form of replay, right? Now, we all both know that on 1 week time frame, we're only looking for expansion and retracement on 1 week time frame, right? Now, what am I going to do? You see this 1 week time frame. What do I have here? I have a sorry, a swing point. If I look at it here on 1 week, you don't really need the Fibonacci because why? Price can be very funny and react inside this other block, right? And you can also take this whole swing point as what? As a zone from 1 week. Now I'm going to go to a time frame lower, 1 day. See how easy it is, right? Now many people will be struggling with where is my swing structure, where is my swing structure. This is the secret entirely. What do I have here? I have a sweep of liquidity. And what do I have here? A change of character, making this whole zone a what? Many people will mark this whole place as what? One daily buy side liquidity. But if you look inside here, this is a 1 week what? Zone. Refining this level again, the last swing point inside here was this swing point, right? If I go to a time frame lower again, what do I see on this time frame lower? This I had to lose money to understand this very very well. A sweep of liquidity, and I really appreciate. I will really be happy people can find this more easier for them, because psychology plays a role in the market, but also you knowing what you are doing also plays a role in the market. Now, if I use my Fibonacci on the daily time frame, right? This is the last swing point, right? If I check my 4 hours, it's still the same thing. From the high to the low, it's showing me that I'm on premium. I'll come down to my what? To my what? To my 4 hours time frame. I'm expecting price to violate a swing point, which price did here. on 4 hours. But this swing point, I want to check this whole zone to know if it's a valid swing structure. And I'll come down to 1 hour, 1 hour time frame, and I will drag it up. And what do I see? A sweep of liquidity. So I'm not wrong in that structural zone for a change of character. But what did price do? Price what? Violated this swing point here. Can you see it? There was a swing point violation here. And if I had used my Fibonacci from this same low to this high, you realize that you're on 50%. Can you see that? But it did not come to any institutional reference point, right? Until there's a change of character on 4 hours time frame, that's when I will take my zone going down to what? To one D. I don't know what's wrong with my trading view. Now going down to 1D, don't forget I marked this swing structure from 1 hour, right? This small swing structure from 1 hour. But going to 1 day, what do I see? A change of character. I don't know why this thing is not doing this for me. I'll put a line there and end the replay. And what do I see there? If you look at this time frame, right? Going down to 4 hours time frame, what do I see there? Price shifted structure here, violating this swing points, right? Around here, right? Now, when price violated our swing points, we know that price swept out liquidity from this swing point, making this whole zone what? A breaker block, aligning with a fair value gap, right? Now, if you come down to this sweep of liquidity here and check it down on 1 hour time frame, this is how you mark your swing point and have rest of mind. You check the swing point. If you have a sweep of liquidity, that's how you mark your swing structure. Look at this whole state structure that you marked now. There was no shift of market structure. Everything came out with a week, and a week. So meaning our 4 hours time frame was still valid. Now that zone that we marked from where? From from 4 hours. Let me delete that, right, and take something closer. I want to show you how simple this can be. I want to see if this can do a replay. Don't know what's wrong with my trading view. Okay, let me use gold as an example, or gold is okay for me. I'll do the same thing on gold. Let me try and delete some and see if we can do a replay. I don't know what's wrong with my trading view. That's weird. Okay. Okay. I'll take GU, right? On GU time frame, I'm going to take this. I'll take it back a little bit, right? Good. Now on GU time frame, right? The last swing point was around where? Around here with a body close, right? On 4 hours time frame. Swing point. Don't forget the swing point. I have what? I have a fair value gap, a big massive fair value gap, and I also have what? An order block above. Which I'm expecting price to what? Come down to sell in more, right? But if I go to my daily structure, this is a whole swing structure of daily. Some people will just mark this as price doing this and to this level. But it has made it very easy for you when you mark your swing point from a higher time frame. Looking at this structure now, I have what? I have a swing point here, my last swing point here on what? On daily time frame, right? My last swing point on what? On daily time frame. Now, what do I have next now? I will take my Fibonacci from this low to this high. This is how you get your swing structure. It made it very easy for me because I kept watching all of ICT's video, and I kept studying how he marks his chart to make mine easier for myself too. And I also have a fair value gap here, meaning I'm looking for buys in this scenario under here. I come down to my 4 hours time frame. On my 4 hours time frame, what do I have here? I have what? A shift of market structure here. The last swing point on 4 hours. If I take it to a lower time frame, I should tend to see a change of character inside that place. That's what makes me know a valid swing structure. When I see a change of character inside those zone, I know that yes, that's the correct zone. I mark what? I mark the valid order block aligning with my fair value gap. When price gets out of this zone, don't forget your Fibonacci from this low to this high, and you come down to 15 minutes. We are doing the same thing on 15 minutes. I'm looking for a sweep of market structure. If I had taken this one, fine, I will hit stop loss, but indirectly this was an inducement, right? I had another one, another shift of market structure here again. And what do I have here? I have what? A change of character again. And what do I mark from this low to this high? My Fibonacci. I have what? I have my fair value gap, and I have my other block. This is my other block, this one, because it's one that had the fair value gap attached to it. And what do? I place my zone there. I lost my prop firm, but it's worth it because I used the prop firm, my FTMO, to practice. I felt bad, but I told myself I'm going to show people the easiest way to mark structure to avoid headache. Because if you don't understand structure, you don't understand any strategy being taught to you. Like as if you're wasting your time. All these things happening here now, if you go to a higher time frame of 1 hour, you find another what? Another shift of market structure inside here. Price took it out here, but the same thing on 15 minutes also. Do you see it? On 15 minutes, what do I see? I see a sweep here, around here too. If I come down to my 4 hours again, I'm expecting price to clear out this high. That is my expectation. And that swing point here, and what do I see on that swing point? I also have a fair value gap that price tapped into. I'm still expecting price to clear that high. You see what price is doing? Now, what do you see what happened here? There was a shift of market structure again. And what did what price do? Price tapped on this other block. You just check what happened in those areas. Was there a sweep of market structure? Yes, there was. Can you see it yourself? There was a sweep of market structure that made that swing point to be created. So you know the zones that you're marking. This is based on using ICT. This is based on using ICT. And that I'm waiting for this whole zone, this area here, to be swept for me to know that my buy continues. And you can see it swept my buy, came what into what the fair value gap here. Even I'll call it a balanced price range. And what do I see? Another block. Like I said, I had to lose my prop firm to get my correction. I felt bad, fine, no problem, but I'm happy I was able to get my correction on how to mark a structure, and we keep moving. And what do I see? Price came for the rejection block, and I'm still at what aiming for my external high above here. You can see that. So when you're marking your structure and you want to know a valid swing structure, make sure there's a sweep of market structure in that zone. Make sure there's a sweep of market structure whenever you mark a swing point or a swing structure. You know, swing structure is normally, they will tell you a valid swing structure always have a change of character. That's where the swing structure starts from. But if you mark a swing point, take a time frame lower to confirm if that is a valid order block. It should have a swing point. I hope this can help somebody out there in marking structure, and you can add your strategies to it. Structure is the main thing, then strategy comes along. I hope this can add value for those outside. Don't forget to subscribe on my channel, ask your questions, and I'll happily and joyfully answer them. Thank you so much.